Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this video, we'll be talking about the CoT index for gold. All right, I'm sure what the previous video where it was the CoT data for gold, but now we're talking about the index. I'm sure if you watched, you know what the index is, and that's what we're going to talk about in this video. So here we have a gold chart, and down here below, we have a CoT index, right? The index. Okay, so what I'm going to show you is how useful or how useless the index can be in during different cycles of price action, right? Sometimes the index can be extremely useful. Sometimes the index is useless. Okay, so that's what I'm going to talk about. So let's begin. Mhm. Yeah, I have my pen here. So as you can see, the index in general is from 0 to 100, and if it's 100, it means price is extremely bullish at that level. If it's below 100, like not below, if it's at 0 or rather below 10, it's supposed to mean price is extremely bearish at that point. So yeah, here's the index. Now if I should expand this bit, yeah. So now we have a good view of the extreme zones below 10 and above 90, 100. Yeah, these levels. So let's begin. So we'll begin by highlighting the markets, okay, the index bottoms and the tops in relation to where price action was at that time. So this is in 2007, 2008, and what is that pen? Yeah, let's use a red one for the bottoms. Okay, we'll first highlight the market bottoms. This was 2007 to 8, and this around here, this is where price was at the time. Okay, and looking at another time, this is now in 2009, but this is the bottom here when the index was almost at 0, and this is where price was at that time. Then again, we'll skip over to 2016, 27. Yeah, this is 2016. There's another time the index was confidently below 10, almost 0. Yeah, even 0 it reached. And then this is where price was at the time. This here, this is where price was at the time. And then again, this is 2019, 2020. This is where the index was below 10 and even at 0, just at very low extreme point. And coinciding with that, this is where the market was at the time. Okay, this is where the market was. This is where price was at the time. And then now here we are. The index is at below 10 and even at 0 at some point. And this is where price is. Okay. Next, we're going to highlight the tops. Okay, the market tops. Let me use a blue one for this one. Okay, so this is 2008, almost 2008, and this is where price was at this time. Oh yeah, end of 2008, beginning of 2009. This is where price was at the time. And then here, this is 2012. 2012, there was another peak here. The index was at 100, and this is where price was at that time. And then again here, this is from early 2013, probably almost the whole year, 2013 to almost 2014. And then where price was at that time was between here and here. Yeah, that's where price was at that time. And then this is in 2015 and 26, some parts of 2016, and this is where the price was at that time. Okay, so and then again in 2018, this is almost at the end of 2018, the index was at 100, and this is where price was at that time, right? And then again, 2022, this is the most recent peak. This is where price was, and this is this is where the index was at almost 100, and this is where price was. Okay, so now we have violated them. Now what you're going to do see is like go checking where the index was perfect, because for example here, this is supposed to mean price is extremely bearish. So we're going to check on the chart to see if price actually fell after this index showing that it's at a good selling point. Right, that's what we're doing. So for this one was a miss. let me use let me use a black for this one. Yeah, this one was a miss, because if the index was almost at zero, and even at zero at some point, while price is making new all-time highs, and in fact the retracement did come. It was a selling point, but it was too soon. So this is, at this point, the index was unreliable. Then we go to 2008. This was supposed to mean price is extremely bullish at that level, and this here, you can see it did coincide perfectly with the market bottom. So this one, give it a tick. And then again here, this was in 2009, almost 2010. Price, the index was showing prices at a selling point, but what did price do? Price just kept rallying higher, and in fact, price never even revisited these levels of $1,000. Okay, so this was a mix by the index. It was not correct at that time. Then there was this other time where the index was showing prices extremely bullish at this point. All right. So again, what happened? Price did go up to some extent, but not for long enough. All right. As you can see, even the positions here shifted quite drastically within a very short period. But since you're only monitoring at the peak point where this showing here prices is extremely bullish, it wasn't exactly a good buying point. I would put that on X, because when you are a swing trader, or when you are a long-term trader, and you're trying to find that sweet spot for buying commodity like gold, this will not function as a good sweet spot if in a few months you are already back to break even. Okay, that's not a very good buying point. And then again here, the index was at 100 for some time, and there were some market bottoms here. Yeah, but they were not perfect, because price kept trending lower. It was mostly flat, but again, mostly trending to the downside. So this was not exactly clear buy signal. But if you look at, like, from the long-term perspective, if you just put a horizontal line like that, you're going to see it was actually a really good buy zone when the index here was at 100. Yeah, it could have made for a really nice buying zone. So what do I do? Let me first erase this one. So what do I do? Okay, this qualifies as a great buying point. So you put a tick on that one. And then again here, the index was showing price is extremely bullish at this level. And true to that, that was a perfect bottom, right? So that's another tick for the index. Price did form a perfect bottom when the index was showing price is completely bullish at that level. Okay, another time, this was in 2016. Yeah, when the index was at zero below 10. Yeah, for some time here. What happened? Essentially nothing happened, because it's supposed to be calling a top, right? This means price is extremely bearish at this point. But what happened? Price did sell off for some time, but in general, this was an invalid signal. So that's an X. And then this is 2018. Okay, 2018, November, December, around there. What happened here? The index again was at 100 to mean this is a very good buy point. And as you can see here from the chart, it did turn out to be a very nice bottom, small bottom to catch. And yeah, that's what it was, a nice one. So that's a tick. And then again here, this is 2020. This is around 2020, 2019, December there, 2020, during that COVID time. The index was at zero, rather below 10 for the most part, showing that price is extremely bearish at this level. Okay. And what happened? Price actually continued to rally higher. Right. So at this time, this index was not useful. So that's an X. And then now this is the latest one, the latest peak rather. This was an 2022. Yeah, just last year, Q4 of last year. The index was almost at 100, meaning price is very bullish at this level. This should form a good buy point here. And as you can see, that did, if you bought here because the index was showing 100, you could have caught the perfect bottom. Okay, so that's a tick on the part of price. For this one, since price is still very fresh, you're going to wait for. It's not logical to state a verdict at this time. So what you're going to do is we're going to use this data to see if this point is a valid selling point, since the index is showing that price is supposed to sell off this time when the commercials are extremely bearish on price at such a time. Okay, so we're going to look at that. This is 1, 2, 3, 4, 5. This is 5 times you could have been right trading the COT index. And what you're supposed to do now is to look at, when was this index right? Was it in calling market bottoms or market tops? And as you can see, all of these are bottoms, all right? So this index is extremely useful in catching market bottoms, okay? So for example, if you suppose you see the gold price is starting to fall, like falling probably to around 2000 or maybe almost reaching 2000. What's going to tell you if that's supposed to be a good buy signal is this index. Okay, if you see this index picking up to 100 or just above 90, that's supposed to mean you can start loading up on your long positions. These are long-term long positions. Okay, you can start loading up because price is about to form a bottom. Okay, so yeah, this index, as you can see, all these bottoms, they were all wrong. Okay, all these bottoms, they were all wrong. Yani, sasa, talking in terms of price action, all these tops, right? This is when the index is extremely bearish, meaning they are trying to call the top. All these times, the markets, or not the markets, but the commercials in this case, they were mostly wrong because, like you see here, this was in 2010 when price formed a top. It was a very temporary one, all right? And even here, this was in 2008 when price formed a top. It was a very temporary one because this top was formed here and then it was refreshed here, and then even the retracement wasn't significant, and in a few months there was a new top already. Okay, so this index is not very reliable when it comes to trying to call a market top, right? It's very useful when you're trying to catch a bottom, like we see here and here and here and here and here. It's very useful when you're trying to catch a bottom. But when you're trying to call the top, this index will probably get you liquidated. All right, nice. So I believe that is clear. So at this time, now when price is at, or rather the index is at below 10, almost at zero, that's supposed to mean that this is like price is supposed to sell off, okay? But considering what we've seen from the past, this might not be a very valid sell signal. It's probably not valid at all, right? We might see a small retracement, but yeah, it's only going to be minor because this index is can be very misleading during such a time. Um, I'm talking about during such a time because market is at, if you note here, the market is at an all-time high. All right, look at the last time when the market was at an all-time high and the index was extremely bearish. It was here and here. The market was at an all-time high and the index was extremely bearish, but it was wrong, right? Mostly wrong. Okay. So that's what I'm saying. This might not be a good sell signal. Okay, it's probably not valid at all. So what I'm going to do next is we're going to go to the lower time frames, like on a weekly basis, only checking for the past year or the past 2 years to see, like from a monthly perspective, what's probably a good buy zone, or what does a good buy zone look like. So what you want to do first, okay, let me first delete all this. So what you want to do first is this index. You see, we've been checking out the 3-year index. You need to change that to probably what 1 year. The 1 year index is better when you're looking at a smaller time frame. All right, the 3-year, 4-year, 5-year index, these are better when you're looking at price from a big perspective, like we're seeing here. All right, so let's switch to the 1 year index, apply, and then this chart should shift frequency weekly time 2 years. Yeah, this is for the past 2 years. Okay, let's wait, daily nearby. No, let's put it weekly. The weekly candles, these are the ones I'm interested in. And then now we can look at price from this window. Okay, this from 2021 to current 2024. So what I'm going to do here, now I'm going to follow the same criteria, only that from this perspective, we're going to see when when is it a good buy zone, because like you have seen from the previous example, this index is usually extremely useful when you're trying to find a good buy zone. All right, not a good sell zone, a good buy zone. Okay, so for example, let's say you are only buying when the index is above 50. So what are you going to do? Let's first switch it to pen, pick the color blue, and you only buy when the index is above 50. This is the 50 line, and this is the first 50. Not this one, this one. Let me delete it so I can highlight it better. This one, all right, this point. I have made the mistake again. This one. This is where we are looking at, right? Whenever the index is crossing from below 50 to above 50, right? So this 50, we don't take it. This one, no. This one we will consider it. Let me delete this one. So you're only considering the 50s when the index is crossing from below 50 to above 50, and even the hundreds. Like at this point, you will consider that. And then another time is here when the index is crossing from below 50 to above 50. Another time is here, and here. This is one region, right? This is one step above 50 again. This is another time when the index is crossing from below to above 50. So we have these instances we have already highlighted on the index, and now we're going to look at the chart to see how well did these buy signals coincide with price on the chart, right? So we can start with this one. This is in December 2021. Here, right? This was the index here was showing you can start buying. All right. So this was another great bottom. Okay, because you can see from here price only went up. Okay, price only went higher, and at this point now I'll have to use a different color for this one because this is like a special case. At this point you can see the market formed a top, right? And you can see this top perfectly coincided with the index being at 0. So what does this mean? This doesn't mean you sell, all right? This means you can start taking profit of this position. That's what it means. Because remember, this is not a good, the index when it's at 0 or this below 10 is not exactly a good sell signal, but it makes for a good take profit region, especially when you're looking at a small time window like this one, because even this is the 1 year index. When the index is showing at a 0 like this one, this means it's a good time to take profits for the most recent buy signal you got. All right. Yeah, that's what it means. So you can see that's what happened. And now we're going to go to the next one. Check back to blue. So this is the other buy signal we got. Oh my God. Okay. Yeah. So my screen unfortunately refreshed. Okay. So this now we're going to analyze this other one. Okay. So this is the next time when price was showing a buy signal. When was this? Yeah, this was around here. This is the other time when price was showing a buy signal. Suppose you bought at this time, all right? Suppose you bought, and then you can see it wasn't a perfect buy signal because price went lower for quite a while. But the good thing with this index is it's going to tell you still if this wasn't a good buy signal, then the when it reaches 100 is going to be the best one. So the first time it got to 100, it was here, all right? And then again, another time when it got to 100, it was here. So you can see these were perfect market bottoms, all right? So suppose you buy here, then you get stopped out in a few weeks. Yeah, because these are weekly candles. Suppose you buy here, then you get stopped out in a few weeks. The index would have given you another buy signal, which was here. And still again, it would have given you another buy signal, which was here, right? Because remember, these are usually long-term positions, and it's not a bad idea to hold a trade if the index already showed you it's at 100. Like, it can't go any higher, it can't get any more bullish than this, and the longer it stays at 100, the more of a valid buy signal it is, right? You can't see the same for when it's at zero, but no, but for when it's at 100, it means it's a very good buy zone. So this one, great by region, great by region. Then again, the next one we're going to look at is here, right? When the index was again below 50, passing above 50. This time here, if you look at the chart, it shows you this is where it was, all right? And if you look at this one again, it shows you this is where it was, meaning these were two great bottoms to catch. This one probably not a very nice one because in about 5 weeks you could have already been in a drawdown, but again, the index gave you another buy signal because another thing you need to look at is the gradient, like how steep is the gradient. For example, here is coming from around 30, well, let's see, is coming from around 44 up to an 80, an 86, right? That's a very big, that's an almost double. Yeah, it's an almost double increase in the index, meaning this buy signal at this time was more valid than this other buy signal. Why? Because at this time the index was coming from 51. This was first, it was coming from 32 to 52, then from 52 to 62. So this was not an exactly big increase, all right? But this one coming from 44 to 86, or yeah, coming from 44 to 86 or 89 there, it was a very valid buy signal because even the step, it was quite a significant one, all right? So yeah, that's something that's supposed to help you when you are doing this. Another thing, another thing you need to look at is that now we're going to go to the next one here. When the index was crossing above 50, like from below 50 to above 50, it was here. It was at around 60. And this is where price was, right? This is where price was at that time. And as you can see, this was another very, very perfect bottom because if you would have bought here just because the index is above 50, yeah, you could have caught this whole move, this whole price swing, all right? And as you can see, just like we said when price was here, then let me now switch the color. Just like we said when price was here, when the index goes to zero, that means that's your signal to take profits, all right? That's not your signal That's not your signal to do what? That's not your signal to now start selling. No, don't sell. Only buy. Because if you're trading with this index, it's only giving you good buy regions and good take profit regions. It's not going to give you a good sell zone. This time it gave us a good sell zone, but mm, if you would have shorted here and then started taking profits here, it wouldn't work out so well for you in the long term. It will not, like we saw on the larger time frame, it's not going to work out so well for you if you decide to use this thing to call the top, right? This thing is essentially useful in catching market bottoms. So for example, when the index is at zero, like here, here the index was at zero, meaning it was showing price is extremely bearish at this point. What you were supposed to do is now take profits for the buy orders you took here, right? Take profits. Then again, when the index now is starting to rise again and goes to around 80s, 50s, above 50 generally, you start buying, all right? You start buying, and then it went to zero here at some point, and that was around in December, early December 2023. Here the index was at zero, meaning here you could have probably took some profits, all right? And then when the index immediately shoots up, especially in this gradient, all right, you can see this gradient how significant it is compared to the price action here. Price is mostly flat, but the index has picked up so fast, very quickly. That means this region is a very valid buy zone. And as you can see, it was a valid buy zone. It was a valid buy zone. And then coming now to zero here, this now this region is where now you start taking profits for the buy orders you took here and the buy orders you took here, probably. Yeah, if you're still holding some of them, this is a take profit region, all right? Then again, so mhm, what you're supposed to do now is wait for the index to pick up, all right? If you see it come to around 50 or maybe above 50, that's when now wherever price will be, it's going to be a great buy opportunity, all right? But now that it's at zero, this doesn't mean it's a great sell opportunity. No, this only means it's a good time to start taking profits. Because as you have seen, let me emphasize this once again. As you have seen, like in the previous example, or from the long-term outlook, if you short when the index is at zero, you are very likely to get wrecked, right? Get liquidated, because this index is usually very reliable in catching market bottoms, all right? It's not very reliable in catching tops. Okay. Yeah. Because gold is in an uptrend. It's only going up. Gold doesn't go down. Like from a long-term perspective, gold only goes up. So an index like this is very useful to tell you when to when to go long and when to take profits. Right? You buy here, you buy here, you buy here, you take profits here. Here. You see? You buy here and here, this is here and here. You start taking profits here, you take some, and then again you buy here. You can see you buy here and then you take profits during this zone like that. All right. As you can see, the index coincides, the extreme zones of the index, they coincide almost perfectly with the market tops and the market bottoms. This is on a smaller time frame. Like you remember, I told you for this one, you have to look at the 1 year index, right? When you're looking at price action, like on this small time window, this is only 3 years of data, right? When you're looking at price action from this small time window, it's best you use the 1 year index. It's going to help you better to um, analyze and try to see where price is going next. All right. So with that, I am done, and I don't think there's anything else I have to talk about. I have talked about it in depth, and yeah. So I don't want to go lower, like from a lower, what do you call it? Like on a lower time window, like only looking at performance in the past few months, no, that's not very ideal when using an index like this, because remember this index is updated weekly, right? And for something that's done weekly to give you enough data to forecast what's going to happen in the next few weeks, you need like a bunch of weeks. Like for example, this is 3 years, and a year has around 52 weeks. So these are around um over 150 over 150 data points, right? And that's why this index is very useful, because you're using very many data points to determine what's going to happen in the next few or the next very many data points. So yeah, but when you decide to lower your time window to only a few weeks, that won't be enough data to tell you what to do. It's not going to be useful at that time, all right? So yeah, I believe I'm done. If you have any questions, you can ask in the comments. And if you found, or even you can DM me on my socials. Or yeah, and if you found this video useful, you can share it with a friend or just leave a like. Yeah, I'm done. Have a lovely day.